Hi and welcome to my channel. Today I'd like to show you how to successfully using TTW-MarketVolumePro with dxFeed to determine market direction. Before I'm going more in detail, only a few words to the installation process of TTW-MarketVolumePro. TTW-MarketVolumePro is available on Bookmap's marketplace, where you can get your license copy. It is a lifetime license with free updates and comes with a 7-day trial. In order to get it run, you need Bookmap version 7.1.0. Currently it is the build 36 and higher to get TTW-MarketVolumePro run. You can get your Bookmap copy when you download it from the Bookmap.com portal. You have here the current alpha version 7.1 and then simply click on download Bookmap here and you will get the latest version of 7.1. And the MarketVolumePro you can get as said from the Bookmap marketplace, where you can subscribe to it and test it for 7 days. Once downloaded, put the indicator in a Bookmap folder of your choice and load it by clicking on Configure API Plugins icon. That means this is this icon here. Click on it and you can add an indicator or a jar file from Bookmap marketplace, and then choose your folder where you have stored the indicator and add it to the API Plugins section of Bookmap. Remember to restart Bookmap in order to allow the indicator to connect to Bookmap's license server. After restarting, simply activate it and it will load the historical data from the beginning or from the start of Bookmap, and then that's it. It's quite a simple and straightforward installation process. Based on the ES future dated from April the 15th, I'd like to show you the meaning and usage of TTW-MarketVolumePro. Let's start with the idea behind. I'm personally making my trading decisions solely based on what market tells me during the trading day. I simply let the market speak, and based on that what market offers me daily I'm acting upon or not. Interpreting market language is an important part of my live and online seminar. By saying that, I'm watching the limit order book, its graphical presentation of the limit order book in Bookmap, and I'm obeying as well external influences. I would like to say that this way, like option market makers and their levels, the daily levels I'm picking up from my daily chart. And additionally, I'm using the TTW-MarketVolumePro as a great help to understand and confirm the market directions. TTW-Pro measures generally the aggressor or market volume. That means this is this volume in this row between bid and ask. That's the market volume, that's the aggressor volume. That's a big difference to all other indicators. For example, divergences. Personally, I think that watching divergences or even trade it, it's a waste of time, and if you are trading it is a waste of money. Classical divergences built for NinjaTrader or Sierra are built on classical candle conditions, and the candle conditions are open, high, low and close, and probably volume. TTW-MarketVolumePro measures based on high quality market by order data every single transaction between market and limit orders. That means between market here in this column and limit orders in this columns here. Bid on ask. That's new because now we are in the position to see where buyers comes in and where sellers start to press the market down, for example. As for all indicators and every trading, the prerequisite is of course a good knowledge of the interaction between limit and market orders. Let's start with the TTW-MarketVolumePro graphs and lines. The red line represents volume which hits the bid. The green line represents the volume which lifts the offer. And the white line is the difference between traded bid and ask volume, and it gives us a great guidance which side buyers or sellers are leading or even start to lead. Coming to the widget section of Bookmap, this is this section here on the right bottom corner of Bookmap. This is the widget section of Bookmap. In the widget section of Bookmap you can follow easily the numerical expression of bid, ask and the difference between both. My preferred setups are horizontal bars. You can choose vertical bars, circles or text. So I'm using here simply horizontal bars. When the numbers on the delta, we will see that, are negative or below zero, sellers are dominating, and when the numbers are positive above, that means above, when they are above zero, buyers are leading. By the way, every graph comes with a price axis. This is this line here. You can easily hide and show the price axis by right-clicking with your mouse on the price axis itself. You can hide it, for example, if it's not needed or if you don't need it. That's it. You can hide it and simply keep one price axis for the most important indicator you are using on the graphical part of Bookmap. That's quite interesting to have only one because, as I've said, the V delta, volume delta, which shows the difference between bid and ask, is quite interesting. As I mentioned before, if you read positive numbers, then the buyers are leading. If you are reading numbers below zero, that means this price axis or this price axis, this time axis here, that means this time axis, then the sellers are leading. We will see that in a moment. Now let's see it in action using dxFeed, ESM20 with dxFeed. I will show you some examples with shares as well a little bit later. Let's start with ES at around 9:36 a.m. Eastern Time to illustrate how to read the information TTW-MarketVolumePro is providing. I speed it up a little bit faster. Now we are approaching the time I want to show you now and what happens at the top and how to understand what this indicator is telling us. Now it becomes interesting. First, remember, the green line represents the buyers who are lifting the offer or ask. That means they are pushing the price up, they are buying everything they can get. And red line, which shows the sellers. Now we see very clearly that the green line is above the red line. That means the buyers are still in charge. The buyers are dominating the market at the moment. We have more buyers than sellers. Quite obvious from the interpretation of the lines here, of the graphs here. You see also when you look at the widget part here, that lift the ask leads the number. That means we have 4,462 versus 4,078. That means the sellers are still dominating the game here at around 9:37 a.m. Eastern Time. Now the price is approaching a high liquidity area, about 27.80, and let's see what happens then. As mentioned in my previous video about the limit order book, the conventions and how to read and how to understand the TTW-MarketVolumePro indicator and what can you read out of it, you can see not only the acceleration or the deceleration of the market, but also volume spikes. Have been indicated here in this case. We have had a volume spike here at that time, and secondly, let's speed up a little bit. We have a volume spike here at that time, and that means the market is likely or probably going to a break, to make a pause, or even to reverse. But what we see at the picture at the moment, is we have had two volume spikes. That is also indicated not only by the volume bars but also by the TTW-MarketVolumePro indicator, and a decelerating buying and selling into this high, into this 2780 area. Let's continue a bit. Let me go a little bit back. As mentioned, these lines are indications for volume spike, and what's interesting, if you are looking at these differences between the green line and between the red line, this is a strong bid-ask imbalance. That means, I switch back a little bit, so to come back to the volume lines, that means this volume spikes gives us an important information. First of all, you can read the volume traded here between buyers lift the ask and between the sellers hit the bid. We are talking about roughly 5,100 contracts here traded, and below roughly 3,700 contracts traded here. That means we have around difference of 1,400 contracts, 1,300 or 1,400 contracts traded between on this price level at this time here. That means this is a strong bid-ask imbalance, and this imbalance must be rebalanced. That means the market needs a break to come back. So the market is always balanced when you see the green and red line are coming together, and that means the market is balanced. If one side is heading away, that means you are watching a bid-ask imbalance. That means that the market is coming to an end, to a reversal, or even to a break. As the market continues, you see also that the difference between the green and between the buyers and the sellers is shrinking. That means it's declining. The gap between this buyers here and those sellers here is bigger than the difference between those buyers here and these sellers here. When you watch very closely, you see how this line is coming together and then crossing. So that means sellers are in charge very clearly now. There are more sellers than buyers at this point here. Every bid-ask imbalance is a warning sign that the market needs a break and rebalance before it continues. Now let's have a look at a white line. Let's switch off the green and the red line. That means there's buyers and sellers. Let's switch off the buyers and the sellers here in this example, and then have a look only on the white line, on the volume delta. I'm calling it V delta. As mentioned before, it is not a simple divergence indicator. It is far, far better than that. Volume delta indicates in this example that buyers are weak in comparison to the sellers. Buyers are weak in comparison to the sellers. So the buyers are leaving the market and the sellers are dominating the market. The declining of the V delta line is a warning sign that there are no more buyers who are eager or who wants to lift the offer, and there are more and more sellers coming into the market. Now when we look a little bit closer to that, let's add the buyers and the sellers again to the chart to see a little bit better what's going on. So we have had two volume spikes into 2780 area here, and as we can clearly see, the buyers are on the retreat, they are retreated, and so the sellers are come into the market. As well as the gap between green and line is closing more and more, and even crossing here at this point. They are crossing this at this point. That means in this case the sellers are dominating the market. Until then, the green line is still up. That means that the number of or amount of buyers at that price and time are still higher than sellers relatively compared to the last few minutes. So we have, compared to the last events in this chart, we have more buyers at that point than sellers. That's important to know. This is not a green over red or red over green system. You must understand the market and its mechanics in order to read this information correctly. Okay, let's continue. Now you are seeing very, very clearly that the buyers are down. You see that on the numbers. Let's do it a little bit slower here. You can't read it on the numbers here. Now, who is in charge of the market? It are the sellers. Look here, we are counting 3,400 sellers into the bid versus 3,000, 3,100 buyers on the ask side. That means this is a clear domination of sellers in the market. As well, you can see the indication here. The red line is dominating. The difference between bid and ask is below zero in this case. When you look at the price axis, it's below zero. That indicates we are in a weak market. That means there is no chance to buy this market at that moment. Please mind also the V delta is negative. So we have more sellers than buyers at this moment in time. Now what happens here at that point is clearly quite interesting. We are still in sales and you see how the difference between sellers and buyers are rising. This is a gap which is quite big. It's not too big, but it should be closed. And what happens here at this point with the difference between buyers and sellers is that at that point buyers starts to kick in. Although the price, we don't know at the moment whether this is the bottom of the market, but we have a very clear sign. That the buyers are coming into the play here, although we don't have seen the final bottom, the final price on the low. But it's impressive simply to watch that this is maybe the area you should tighten your stop, you should trail or even maybe exit the market, because there are no more enough sellers, there is not enough power on the sell side to press the market down. With other indications like reading the order book, understanding the numbers here, understanding the role of liquidity and so on, you can conclude what the market is doing here. And it's quite impressive to understand and see that how the market get a depletion of sellers and how the market indicates the buyers kicks into the market here. Although it started here, it was not the low of the day, or not the low of this moment in trading. It was here, I think 27.61, but all the way down you have a nice indication that the buyers started to regain the control of the market. And as a conclusion, it means simply that this move is about to revert. And that's what I'm telling everyone who wants to listen is, let the market telling you what the market intends to do. That's very, very simple, and let the market guide you. Understand the language of the market, and you will have more success in trading than simply following indicators. As well as you could see that what I mentioned before, this gap, this distance, the distance between the buyers and sellers is shrinking all the time. It's shrinking, it's coming gap. The gap is being to be closed, and at some certain point buyers are taking the control, are taking over the control of the market, and they come in, kicks in, lift the offer, and the price goes up. This is the general usage of the TTW Market Volume Pro indicator for dxFeed as well for Rithmic and SecuG. It calculates and plots every incoming market by order data information and gives us a reliable indication what our traded market is currently doing and what it intends to do. TTW Market Volume Pro works with all liquid instruments and shares as well. It works with dxFeed, with Rithmic, SecuG, IQFeed, and so on. Now let's have a look at shares. Apple with dxFeed. It's currently trading around 282, and it's around the same time we have had a look at the ES future. That means 9:36 a.m. Eastern Time. As you can see, we have a very similar process or progress with the Apple share. Starting at 9:36, and as you can see in the indicator, in the TTW Market Volume Pro indicator, we have the the market started to buy. The market started to buy the Apple share, but suddenly you see that more and more sellers are coming in. That means something, and let's go a little bit faster with the Apple share. You see as well as here, it's always the same systematic, it's always the same mechanic. We have had a nice volume spike into 283 and 10, 12, 14. Buyers are still dominating Apple. There are still more buyers, but now it comes a little bit, we have a little bit different picture. That means sellers are overweighting the buyers here at this point here. At that point here, sellers are overweighting the buyers, and as you can see, the V delta, the volume delta, is negative. So when we account, then see the zero line here, zero timeline, then the V delta, the volume delta, becomes negative. Let's see how this works out. What happens here? It's going a little bit faster, just to save a little bit time, not to bore you with this recording. Now it's very, very clear. It becomes very clear here that when you drill in or when you zoom in, you see very clearly what happened with the Apple. We have had a nice volume spike here into this area, 283 area. Again, a nice volume spike here down, but still the sellers are dominating the playground here. The sellers are dominating, and as well the V delta is declining. It's below zero. That means we have more sellers. We have more sellers than buyers. This is continuing now, and what you can see here as well, it's the same procedure, and as in the S, you can see that V delta is rising, starts to rise here at that point. It starts to rise at that point. That means we are now minus 4,500, and before we had minus 16,000, 20,000, and so on. You can see it very clearly in the numbers here. Watch simply the numbers and you will see and understand what is happening. And even the gap between red and green is shrinking or declining here. The gap is going to be closed here at that point at 9:46, and you see how volume delta is still increasing, and now they broke the zero line here. Excuse me, it was a little bit too fast. It's a little bit different now for the shares, but you can see clearly that this number becomes positive, and we have a green over a red line. That means buyers are coming in. Buyers are coming in and dominating the share. trading management is when you understand and see the bottoms. It's not always successful to hit or chase the lowest point of a swing or reversal, but to understand when the market is flipping from one side to the other side. It gives you a fair chance to join the buyers or to join the sellers. And then it is your responsibility to trade or to use trade management. For example, use an ATR, average true range, as a stop system to understand and to stop your position, to trail your position. That's the point. So the indicator TTW Market Volume Pro helps us to understand the main movements, to see where the bottoms are and could be, and then to take action on this based on this knowledge for your trading. The next part and the most important part is then that you should know how to manage your trade. There are numerous and too much examples to go over, but what I wanted to show you now is the Microsoft share as well. I skipped the Microsoft until 11:30 a.m. Eastern Time. That's what we see here at the chart at the moment, and we see very clearly that the buyers are dominating at the moment. Here at this part of the chart, buyers are dominating. Buyers are still dominating. Not so much, but they are still into the game. So you see also this lifty ask is above the hit the bid. Here that means buying, buying, buying. Let's continue a little bit slower here. Now you can start to realize, as mentioned before, that buyers are now losing ground here. They are retreating and sellers are coming in. As well as the deceleration of the buyers, you can see it here and lift the ask. There is no one, or there are less and less and less, and now sellers are coming into control here. Sellers are start to control the share here. They are kicking in and they're selling into bid. That means they are hitting the bid, they are hitting the bid, they are hitting the bid. You can see it very, very clearly by only watching the V delta. This is the difference, as mentioned, the difference between bid and ask. Or if you want to look at the lifting in ask and hit the bid graphs or lines to understand better what's going on. Now the difference between sellers and buyers is quite big, it's quite good, it's big. It's coming bigger and bigger, and the difference is still growing here. Let's do it a little bit faster. And that's what's happening. Probably they are going to look and to hit this 172 in Microsoft, which means it's a nice gain if you are selling this at around 172.80 up to 172. You see the same principle here, principle at the bottom. Buyers kicks in here, comes into the game. They are trying to buy. Now you see also this red line is very close together. There are no bid-ask imbalances anymore, and then they are going to hit this 172 area. Now we have had volume spikes into this area down 172. You can see here on the numbers that the buyers are into the game now and are dominating the game. You see plus 3,000, plus 2,000, and so on. Now the market is likely to return or to reverse, to pull back, to go up. But the point is, when you understand that and you see that in this case for Microsoft or for any other instrument whatever you are trading, for every other liquid instrument, then you know that you can sell this area with a target around 172, and TTW Market Volume Pro shows you very clearly how to trail and where to take your profits. It's everything in here reading, because we are relying. We are not counting open, high, low and close of a candle. This simply for conditions of a candle. We are relying and we are measuring the aggressive volume, which is based on market by order data. TTW Market Volume Pro is a new generation indicator calculating real aggressor or market volume based on market by order data for dxFeed, for Rithmic, for CQG, IQFeed and other data feed provider. Understanding market mechanics properly and using helpers like TTW Market Volume Pro gives you a clear edge in your day trading. Thank you very much for your interest in my channel and for this presentation. You can find all links and further information in the YouTube info section below. Thank you, stay safe and take care.